Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Tuesday, January 3rd through Friday, January 6th, 2012 is brought to you by RealTick. Alright guys, let's get right into the mix. Let's take a look at the charts. Let's get pumped up for the new year because it's going to be a profitable one. Why am I saying that? Because ultimately the volatility we've seen over the last few months is here to stay, and that's what In The Money Stocks thrives on. The ups, the downs, being on the right side of the market, being on the right side of the trade for multiple days as the market goes up or down. And that's exactly how it's going to be for the next foreseeable future, next few months. And again, let's take a look starting here at what happened last week. And again, this was a 4-day week because last Monday was closed for the market. And as you can see, the market opened up a little on the stronger side, then had a little bit of a sell-off on Wednesday, bounced back on Thursday, and then a little bit of a flattish day on Friday. Now, Friday, you can see this late day sell candle right at the end of the day. This is the SPY 10-minute chart, folks. 10-minute chart. This again shows us on an intraday basis what the market was doing. And bottom line is this. If I zoom in, you can see that candle down. Many people would say, oh, that's negative, that's bad. Bottom line is it's not bad. First off, you had the in spirit of bearish pattern. See this downward move, sideways consolidation. So it kind of alluded to that aspect. You were going to see a little bit of a sell-off there. But if you think about it logically, it makes sense. First of all, it's New Year's. It's a 3-day weekend. Who wants to hold the market into a 3-day weekend? Plus, it's New Year's. You know, God forbid any type of terrorist actions happen, but there's always that chance on New Year's and so forth. So you get a few sellers on very, very light volume. And again, the volume was minuscule all week, but especially on Friday was light. Selling and just saying, you know what, I'm not going to risk it. There's no reason to worry over New Year's. Let me go have some fun and not think about my positions in the market. And again, that's where that selling comes in last candle, and we'll see again. Now, the key is assuming things stay quiet. And this is projecting out, folks. This is based on the analysis, the proprietary analysis here at InTheMoneyStocks.com. Assuming the market doesn't get any major negative news over the next few days going into the new year, the new trading week, what you're going to expect is for the market to head higher next week. All right, and again, I'm going to show you the charts, and we're in a triangular pattern, technically speaking, which is, again, a very interesting triangle, and I'm going to show you more about that. In fact, let's look at that now. This is what I really want to focus on today in this video this weekend. All right, this is going into the 2012 trading year. And again, by the way, you can always come join In The Money Stocks and take a 7-day free trial. If you want to get the trades that are going to make you money in any market, that's where you come. 7-day free trial to the Research Center. You're going to get swing trades to buy and hold for a couple days to a week or so, and you're going to start making money. And it's going to be a better year than even 2011. I know that's hard to say, considering how much money we were able to print out here at InTheMoneyStocks.com, but it will be the case. All right, because again, the volatility is here to stay. We see the projections out for the market volatility for the next few months already and have it mapped out for you. All right, we'll be releasing that over the next few weeks as well as we get into this market, and we'll be taking positions. We give you our live positions as we take them. All right, so again, 7-day free trial at InTheMoneyStocks.com for the Research Center and the intraday stock chat. But bottom line is, look at the triangular pattern in green here. If you connect the low pivots all the way up, and then you connect the high pivots, and I'll zoom out to show you this high pivot, this one to here, and all the way down, you essentially have a triangular pattern. Now, you're hovering right on the upside of that triangular pattern. All right, as long as you hover there, you want to give a slight neutral to positive bias to the market. In addition, assuming nothing crazy happens in Europe over the next couple days, you have to think that the light volume in the first week of January with mutual funds getting more money for investment purposes and positions being taken and so forth, you'd have to give the market a neutral to upside bias. So again, this is what we're watching very closely early next week on Tuesday. Remember, Monday the market is closed. Tuesday is what you're following now. Do we close and confirm above this green triangular pattern? If we do that, the markets then will head higher, and they should head higher very quickly. You should head towards 129.50, which is right here, as your first resistance. So again, resistance number 1, 129.50 on the SPY. That's again assuming we break out above this trend line, this green trend line. All right. Now, number 2 resistance point, if you get through 129.50, number 2 at 130.80, so 130.80. If you take that out, you're going to go to the high range, which again is at 132.50 to about 133.25. This area right up here, which is gap window, gap fill going back here. This is your next major resistance. So again, resistance 1, resistance 2, and resistance zone 3. Right, and again, that's contingent on a break above this green trend line on a closing basis. If it goes above it intraday, it's not that big a deal to me. We want to see a firm breakout and then really confirmation, which is a proprietary technique developed here at InTheMoneyStocks.com. All right, now let's look at the bad case. Let's look at the negative case for this market. If the market's not able to break out early next week, Tuesday, Wednesday, you have to start getting bearish. It should break out Tuesday, Wednesday. If it doesn't, start looking for downside, especially if you get below these two moving averages. See the 20 and the 50 moving average right here? On a closing basis, if you get below those levels, you have to start getting very, very bearish. And ultimately, the breakdown would occur on any close below this green line sloping up. That's the bottom of the triangle. Okay? So again, a close down in this range, for instance, somewhere down here, you'd have to start looking for this pivot low right here, which is at 120. And believe it or not, if we do break below and confirm below this green trend line, you're going to go down much further than that. You're going to go all the way down to about 116.40. And my guess is you have a chance over the next month or two to possibly go as low as 107 to 108 down here at a double bottom. That's how powerful this triangular pattern is. Now, you can tell how powerful the triangular pattern is because the market has stayed within this zone for the last 6 months. So it's a major, I mean, you're not talking about an intraday zone here where a breakout would give you, 50 cents on the spiders or 5 points on the S&P 500. You're talking legitimately about a major level that has been forming. It's almost like a volcano ready to erupt that's been kind of getting bigger and closer to eruption for the past 100 years or 200 years. I mean, if an eruption occurred a month ago, it might not be that big of an eruption now, but just building that force longer and longer, that's when you know you're going to have some sort of major move. So again, this is the chart to watch, folks. There is no other way to say it. You follow this. Right now, because you're at the upper range of this triangular pattern, you give the market a little bit of an upside bias. I have an upside bias on it personally for the next week or so. If we get up here in this general zone, then we start to look for a pullback and obviously a negative move. And then ultimately, you watch for the triangular pattern to break down. If that does happen, and again, the breakout should occur Tuesday, Wednesday. Really shouldn't take longer than that for you to get a break above this. If it hasn't happened at that point, I'd look at it as a failure and probably look to the negative side. So really Tuesday, Wednesday, the big days. Now, having said that, let's talk some trading tactics and ways to make money in the new year. All right, how are you going to step up your game? All right, now in the Money Stocks members, they're here to stay. They're lifers. All right, they're part of the elite group that we have formed here using our proprietary techniques that no one else knows about. All right, hedge funds, institutions, they don't know this stuff. They use, massive amounts of money in black box trading programs and so forth. We have the true answer here, and we'll teach it to you, obviously. We teach our members. Traders Life is an awesome thing, which is a social network here at InTheMoneyStocks.com as well. But bottom line is this. Let's talk about a play from Friday that was an awesome play. Ren. Now, Ren, again, had a great move. You can see low end of the chart, popped, closed above the 20 moving average, which bodes bullishly for next week as well, the fact that it closed above that 20. But the key is I alerted my subscribers in the Research Center, Hot Charts and Alerts. So again, you can take the Research Center, which is a free trial, 7-day free trial, and you get access to everything in the Research Center, which includes the Hot Charts and Alerts. And one thing I pointed out here, which is very, very key, was that we saw a volume buildup. All right, we saw a major volume buildup early in the day. All right, now again, it's hard to see on this chart. Let me just see if I can zoom out here and show you guys exactly what was going on. All right, this is what I was talking about right here. All right, so one thing I was pointing out to our members, folks, and I alerted them to, was that on Ren, on Friday, you had an abnormal amount of volume early in the day. Between the first hour of the day, 9:30 and 10:30, there was an abnormal amount of volume. And the stock was up a few pennies. I mean, it closed around 130, and it was trading at around 133, 134, 135. And one thing I noted is, on the last trading day of the year, when volume is probably the lightest of the year, this stock was doing crazy volume. I was seeing on the level 2 accumulations going on, 20,000 blocks, continual 10,000 blocks being picked up nonstop. And that's why you see this pop in volume here early. Now, the stock hadn't really taken off yet, right? And if you compare it to the day before, this is the normal volume for Ren. All right, but today, or I should say on Friday, we saw abnormal volume, and that was a dead alert. You have to pay attention to this type of thing because you can hop on board right here around the 335 level right here and make a lot of money. So again, I put out the alert on the hot charts and alerts that Ren was going to pop based on volume. And again, this is a January play, which, by the way, Hidden Gem is coming out on Tuesday. First day back, the Hidden Gem. All right? These are small cap plays that have explosive upside potential, and I have one that is going to be a monster. And I will release it on Tuesday to our members inside the Research Center Hidden Gems portion. And again, the free trial covers that too. And it covers everything inside that Research Center. Bottom line is, this was a beautiful indicator. The volume was the telltale that Ren, which is a Chinese play, was going to go. And look at, if you bought there, look at the stock the rest of the day. I mean, it was just a thing of beauty. Money upon money. You bought around 335. It went all the way to 361. And this will go higher too because it closed above on the daily chart, the 20 moving average. So again, the alert went out. Bam. Money in the pocket. And again, it should run higher. Beautifully higher in my opinion. First stop, by the way, I think will be right here. Right around the $4 level. And then I think if it gets through $4, then you're going to go to the 50 moving average. It has a lot of upside potential. All right, so this is just giving you a sense. And by the way, January plays will be fast and furious. All right, January plays. What is a January play? January plays are stocks that have been beaten down, that have a lot of shorts in them, that basically into the last month of the year were at their lows, like Ren here. This is a good example. I'll show you another good example, THQI, which I gave out to my members, and they're in the money on this one already. Beaten down plays that saw a lot of tax loss selling into the end of the year, which kept the stock price down. Now you can't take a tax loss once the new year comes, right? That's for the next year. So that selling subsides, which has been keeping pressure on these stocks, and what you usually see is a pop back. So there are some great stocks. This is one of my favorites, THQI as well, which again is already in the money for my members and should continue to be a continued gainer in my opinion. All right, so a beautiful little thing right here on THQI. What else? Well, there's a couple others, but to be honest, I'm going to give it to the members in the Research Center Tuesday and Wednesday. We're going to still file out some new ones, some new January plays that should see explosive upside moves. And we're talking about 25, 50% type upsides on some of these. I mean, in my opinion, THQI is going back over $1 within the first couple weeks of the new year. All right, first stop is going to be right around the 20 moving average, which will be right around 97 cents. And then I think it has a chance to go to gap window right here at 120. And maybe even back to 145 if it really gets its mojo going. I mean, there's a lot of upside in these type of plays. And again, the beauty of it is THQI trading under cash, $800 million in revenues a year. It's a buyout candidate. I wouldn't be surprised to see Activision or some of these other big boy video game players come in and pick it up for $50 million market cap that it's trading at now. They'd probably pay $100 million for it, and it's a steal of a deal in my opinion with the games they have out. All right, but again, we'll have to just continue to watch it. Bottom line is, it looks good to me though. All right, let's take a look at a couple other things. How about JP Morgan? JP Morgan's chart actually looks good to me. I will say that. All right, why? Well, you had this nice move up here and a pullback. Beautiful pullback, great pop. Now, once you popped back up here, what I like is that you've consolidated back into this necktie. You have a golden cross, which is the 20 moving average, crossing above the 50, which is positive, and the stock continues to trade above these moving averages in consolidation mode. That's bullish consolidation. You should break to the upside here on this chart. All right, so that's what I'm going to be looking for, and that also kind of gives me that neutral to upside bias for the early portion of the new year, first few days to week or so, based on the fact that we see the bullish pattern on JP Morgan. JP Morgan, if it trades up, the market goes up. If it trades down, generally the market goes down. It's very much a leader in the market. All right, and again, that bullish consolidation there looks good. What you can also follow is this trend line right here. All right, this trend line is going to be a little bit of support. We'll just drag that right there. And also the moving averages. What I wouldn't want to see is the stock close below the moving averages down here. And then the worst case, you wouldn't want to see it close below this trend line. That would be a breakdown. But as long as it stays kind of in this general zone, it looks good to me, especially the fact that it's above those moving averages. Let's take a look at Apple Computer. Now, Apple, again, you know, you can see the pattern here. Had a great move up, actually a great move here, pulled back, and another great move there. This is actually showing us consolidation as well. So again, there's a lot of consolidation on the markets showing here, and again, that leads me to believe there may be a little neutral to upside bias on this. If Apple breaks up, where's it going to go? Probably back to this general vicinity, right around the 420 to 425 level. One thing I told my members here, I called the exact top right here on Apple, and the reason why it was so obvious to me, and should be obvious to you as well, just take a trend line right here, guys, and just draw it across. See that? So you get all these pivot tops, you know, here, 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 and here, and continue on and so forth. All those pivot tops, and look at Apple went right in there and then pulled back. So you can kind of, if you know the methodology, you basically put yourself in a 90% chance of winning every trade. So that means 9 out of every 10 trades, 8 out of every 10 trades, you're going to be a winner on. Now, the key is on the one that doesn't work out, or the two that don't work out after every 10, how are you cutting your loss? And that's the key. You got to have a discipline. We teach that discipline here. We'll show you how to do it. We'll show you how to pick your technical levels so you know when a major breakdown is occurring. And this way you can profit in any market. And that's what we do, folks. We're going to profit in any market. I don't care if the market's going up or down. I'm not a bull. I'm not a bear. All I do is position myself according to what the charts are telling us while avoiding the Wall Street nonsense and hype. You know, all the media out there hyping, oh, this is bullish, that's bearish. Nonsense. They're almost wrong every single time. Okay? All I do is look at the charts, and the charts will reveal themselves if you know how to read them. So again, do not delay. The new year is here. All right, the plays are going to be fast and furious over the next 2 weeks. Come join us here. Take that 7-day free trial. 7-day free trial. There's no risk. You can cancel before the end of your subscription, and you're not charged at all. It's that simple. And again, the money is there to be made. We have people taking the free trial, making enough to pay for years of the service just in that 1 week free trial. All right, guys. First off, looking into next week, remember, No Hype live broadcast. Live broadcast where you view my charts, where you ask questions of me. We'll go over the market analysis, the plays for the week. That's Monday night before the market opens Tuesday. All right, Monday evening. If you take the Research Center, you get access to that. Next, Tuesday, Hidden Gem report released. Hidden Gem, we're looking for upside of 100% in the matter of a couple months, if not less, on the new Hidden Gem play. If you remember PEIX, Pacific Ethanol, 500% return 2 hidden gems ago. Okay? And again, all week long, new small cap, new January plays, new large cap plays, market moves. Let's do it. It's here. The money is there to be made. It's up to you to come here to In the Money Stocks and do it and join to make it. Take care. Have a great holiday. Happy New Year to all of you guys out there. And again, I'll be making money in 2012. Hope you join us here at InTheMoneyStocks.com.